affiliation. We are webcasting this press conference, so please use the wireless microphones here in the room. We also have some journalists participating via teleconference today. So we'll do one question and one follow-up here in the room, and then we'll turn to the phone lines to try to make sure everyone gets a chance to ask their questions. And the Deputy Governor will be happy to take to answer questions in both official languages. Alors, avant de poser une question, prière de vous identifier. Je vous demanderai également d'utiliser le micro sans fil dans la pièce. Et puis, libre à vous de poser votre question dans la langue officielle de votre choix. So I think we can start here with Eric from Bloomberg.
Hi, Eric Hertzberg with Bloomberg News. Good afternoon, Deputy Governor. This question, you discussed in your speech the discrepancy that the bank has seen between what's happened to consumption growth, household consumption growth, and income. And I'm just curious if you could speak a little bit more to that, and also just let us know what you believe to be more reflective of what's going on in the economy from that perspective.
With respect to consumption growth, in Q1 it was relatively strong, so we expected growth in consumption would be somewhat softer in Q2, but it was much softer than we expected. And some of that is, inherent volatility related to motor vehicle purchases. So some of that was kind of built in, but it was still softer given that labor income grew by 7%. So it is a bit of a puzzle. I think part of the reason, one of the things that we're working on is looking at the deflator for consumption that we've seen over the last few quarters. Nominal consumption spending has grown by roughly 4%, and real consumption spending has been in the neighborhood of 1.5, something like that. And this time it was well below 1.5, and part of the explanation was the deflator actually increased fairly significantly. And so we've raised some questions with the StatsCan about the deflator, and so I think we'll see how that evolves. I mean, deflators tend to be volatile or driven by underlying prices, so that's the issue we're monitoring, trying to better understand the volatility in the deflator that's causing the movement in consumption.
Did you have a follow-up question?
Yes, I'm curious about how you would characterize the bank's current policy stance. Would you consider it to be a neutral stance? And if so, would you say that the odds of a cut are just as likely as the odds of a hike in that case?
I mean, as we said in the press release, the stance that we decided upon yesterday, we think is consistent with achieving our inflation target over the next 2 years, and so it's, I mean, whether we do, as we said in the press release, we do think it provides sufficient stimulus to the Canadian economy to offset some of the dampening effects from the global trade wars. So that's the way I think it's best characterized. I mean, in terms of going forward, we'll have another projection in October. We'll look at global developments and other data at that time, and then we'll reassess the evolution of our base case scenario as well as the risks.
Thank you, and we'll go over to Rebecca of All Nova Scotia.
Hi. So on stage, you mentioned that if interprovincial trade were liberalized, that would have a significant impact on potential growth here in Canada. Mm-hmm. And so I was just wondering, what else can provincial governments do to strengthen the economy, thinking that, to shield us from, as much as we can, from the trade war that's going on between the U.S. and China?
Well, interprovincial trade is one important thing, but I think in terms of, there's a whole, when we talk to small firms and other businesses in our Business Outlook survey, they talk, we ask them questions about obstacles to investment, obstacles to hiring, and there are things that fall within the provincial domain. Some of that is regulation, some of that is project approval, Some of that is labor rules. So I think provincial governments, they have certain obligations that they're trying to meet, but at the same time, they should be mindful of the impact of some of the policies they implement on business investment, on hiring, and eventually on potential output growth. And I know that some provinces, for example, I think Nova Scotia has done a very good job in terms of encouraging immigration. I know they have this study and stay program for students. Like Nova Scotia's endowed with very good universities, and they've taken on board a policy to encourage some of their the students that arrive from overseas to stay in Nova Scotia and have a productive life here. So I think there are thoughtful ways of addressing some of these issues, and I think Nova Scotia's done a good job, especially with respect to immigration.
And a follow-up question, what sort of weakness in the Canadian economy would we have to see for the interest rate to be cut?
Well, as I explained in my speech, really what we're looking at when we make an interest rate decision is really the evolution of the output gap. And so if we were to see excess supply building in the economy, which would put downward pressure on inflation, then we would consider an interest rate cut. But at this juncture, we feel relatively confident about where the interest rate is, what the evolution of the output gap is, but we don't have a full projection. We'll have a full projection in October where we can build in the new data and new information we have about the implications of the trade war, for example, on the Canadian economy. So essentially, we're making a decision today to target inflation out 2 years, and that decision is based on the evolution of the output gap, as I described in my speech, and that's going to be a function of the new data we receive and any other shocks that arrive in the meantime.
Thank you.
Thank you, and we'll now be going to the phone lines. I would just like to remind people on the call to mute their lines when they're not asking a question. You can do that by pressing *6 and then unmute by pressing *7. Je vous demanderai de mettre votre ligne téléphonique en mode discrétion jusqu'à ce que vous posiez une question. Vous pouvez le faire en appuyant sur étoile 6. Et pour enlever le mode discrétion, faites étoile 7. And I think I have a question from Kelsey from Reuters.
Thank you, Deputy Governor, for taking my question. It's Kelsey Johnson from Reuters. My question is, how concerned are you that the global downturn could be worse than expected and force the bank to cut rates perhaps more quickly or decisively?
Well, we've listed it as the biggest risk to our outlook, and so we are quite concerned. I mean, I think one thing to keep in mind is that we've been concerned about trade policy and trade policy uncertainty for the better part of 3 years. I mean, initially it was NAFTA related, and more recently, obviously, it's the U.S.-China trade war. But we've been including in our projection uncertainty effects on business investment and on exports in Canada. And since the trade tensions have broadened to other countries, we've been building that into our projections. So if you look at our outlooks for the global economy in some important countries, they've generally been, the growth outlooks have been lower than other institutions like, for example, the IMF and institutions like that, because we've already taken into account some of the impacts of these trade policy actions and effects. So we're already starting from an outlook that's a little bit weaker than other jurisdictions. So, and that's part of the explanation why the policy interest rate in Canada is 50 basis points lower than it is in the United States. It really reflects the circumstances that we're dealing with here in Canada.
And as a follow-up, in terms of Canada's inflation, why does the bank see Canada's inflation sitting near target when other countries are not meeting their targets?
Well, there's a variety of reasons. I think we listed two in a footnote in the speech, but I think the two we listed in the speech were essentially that we've we feel that expectations in Canada, inflation expectations are very well anchored at 2%. I think that helps us, helps inflation be relatively well behaved and stay close to target. The other thing to keep in mind is that we didn't suffer a severe financial crisis in Canada in the global financial crisis. No banks failed, and so the depth of the recession in Canada was much less than in some of the other major advanced economies, and so we didn't have a huge dislocative effect on the labor market. And so we generally saw participation rates, for example, prime age participation rates recover to virtually all-time highs in recent years, whereas in the United States, for example, there are a number of economists have pointed to disguised unemployment in the United States that's holding down wage growth and holding down inflationary pressure. So, but there's other pressure, there's other factors as well. Different countries can have different exposures to global forces. For example, in terms of their exposure to disinflationary forces coming from emerging market countries, that can also exercise downward pressure on inflation. So there are a number of different factors, I mean, that forces that you could talk about, but I think the one thing that we look to in Canada is that because we've been relatively successful in achieving the target, it sort of creates a virtuous circle that inflation expectations are so well anchored that it helps us keep inflation close to 2%.
Thank you. And I think we have a question from Kim of the Wall Street Journal.
Thank you. Kim McCrail from the Wall Street Journal. The statement that the Bank of Canada issued yesterday mentioned household debt levels. So it's something that hasn't been raised in Bank of Canada's interest rate decisions, the statements for a little while. Can you talk about why you decided to put that issue into the statement and why you spoke to it again today?
Well, the reason is that, I mean, for how, residential investment has actually been a negative, has been growing, their contribution to growth has been negative. It's turned around more recently, and it's turned around faster than it's rebounded faster than we expected. And so we see house prices starting to rise across the country. And so we felt that, this is clearly the major vulnerability we identified in the financial system review that we publish. And so we wanted to say that clearly we're monitoring this issue. We feel that the measures that have been put in place, especially the mortgage stress test rules, will continue to improve the quality of mortgage lending. But it's just something that we're mindful of, and that we wanted to let people know that we are monitoring the situation. That this, we're conscious of housing recovering, and it's recovering faster than we expected, so we wanted to let people know that we were monitoring that situation because we're concerned about that vulnerability.
Thanks. And along some similar lines, you also in your speech today referenced the level of Canadian interest rates compared to the level in the U.S. As well as talking about Canada conducting monetary policy appropriate to its own circumstances. Are you trying to emphasize that Canada might not be taking the same track as some other economies, including the U.S.?
I mean, I think the U.S. has, they've reduced interest rate. Well, they've done one cut most recently, and their circumstances are different than ours. I mean, they're starting from a point at which, their interest rate's higher to begin with, and also they're starting from a point where inflation is below target. So they have those concerns, whereas we're at potential, inflation's on target. So the circumstances are different, and our policy rate is lower than theirs, and so it is providing some stimulus to offset the effects of the trade war.
Thank you. And I think we have a question from David Parkinson of the Globe and Mail.
Oh, hi, Larry. Thanks for taking these questions. One of the things that I noticed in the speech in particular, you pointed out that, and I quote, things could certainly get worse internationally. in the past, when talking about the trade dispute situation globally, and U.S.-China in particular, the governor has always made the point that there was an upside risk to this as well as the downside risk. And I couldn't help but notice that the speech didn't talk about the upside risks, although I do know that somebody asked you in the Q&A following about that, but it wasn't something that you brought up. And as I said, the governor has consistently brought that up when he's talked about it. Is there a little bit of a change of thought reflected in that maybe the downside risks are now so much bigger than the upside risks that we really shouldn't be talking about the upside as much?
Well, that's a good point. I mean, part of the reason is I wanted to keep the speech as concise as possible, but I mean, as the trade conflict sort of drags on, one could it's harder to see that there's going to be an immediate resolution. I mean, that would be wonderful if it happened, but you look at how this has evolved over the last few months, and so it does raise the issue that the level, the tension could remain at the current level, elevated level. I mean, one can make reasonable arguments on either side that there could be a quick resolution as well as a resolution that drags on into past the U.S. presidential election. So given that it's persisted for this period, since the spring when I think things really escalated, chances are it's going to stay at this level for a longer period of time. That's part of our thinking. But there are reasonable arguments one could make on the other side as well. But I think we do still believe it's two-sided risk. One could see a resolution happening sooner than otherwise.
Thanks, and I just wanted to ask you about maybe you can shed a little bit of light about the discussion among the governing council in the room during your deliberations. We're wondering if the concept, because it is something that the bank did back in 2015 in terms of acting early and talking about an insurance cut, did the concept of an insurance cut come up in the deliberations? Was that part of the conversation? And if so, can you tell me why you opted against it?
Well, I think the situation, I mean, if I compare where we are relative to where we were in 2015, the economy was not at potential. Inflation was below target. The oil price shock that we saw was concrete. We knew what it was. We had talked to folks in the oil sector. We knew what the magnitude of the impact was, particularly on investment in the sector. And we knew that it was going to be relatively persistent because the oil price decline was driven in large part by the expansion in U.S. shale oil production. So there was much less uncertainty about the situation in 2015 than there is now. I mean, right now, you look at the uncertainty of this shock, and there's multiple dimensions of that uncertainty. I mean, how long is it going to last? It's a complex shock in that it has both demand and supply effects. How are markets going to react to that shock? How are bond yields going to react? How are exchange rates going to react? How are the countries affected going to change their policies, like the United States or China or Germany? Are they going to adopt easier monetary policy or expansionary fiscal policy? And what are the impacts on Canada? So I think the range of uncertainties associated with the shock are so much greater than the shock that we dealt with in 2015. It made sense to us to be more cautious in terms of looking for additional data to update our projection in October, and given that level of uncertainty.
Okay, thanks very much.
And the other thing, David, is that we already, as I mentioned earlier, we've already taken on board a lot of the uncertainty in the base case. And so I think we've been different than other jurisdictions in that the outlook has been, for the growth outlook at the global level and also for Canada, has been lower than other forecasters.
Thank you. Is there
Okay,
any
thanks.
questions on the phone line? We have time for maybe one quick question. In that case, this concludes today's press conference. Thank you very much.